presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So
Well, we appreciate you growling prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
You are. Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Folks, this is Jacob Shoup filling in for Tom O'Brien. I believe he'll be back tomorrow. If you want to ask me a question, go ahead and send me an email at jacob@tfnn.com. Of course, you can call our listener line as well. Let's take a look at what we got going on. Obviously, we're all kind of waiting with bated breath for tomorrow with the Fed, kind of see which way this market's going to go. Pretty sideways right now, at least looking at the ES Mini, trading just off about 0.06%. Still at 4,951 for that futures contract. The Russell down about 0.81%, trading at 2,006. NQs about down 0.7, 17,581, and the Dow futures are up again slightly at 0.3%. Let's take a look at gold. Okay, we got a little nice move in gold in the recent days. Let's see if we can kind of keep that going, right? Again, I think a lot of this is going to hinge on what perspective the Fed's going to take tomorrow. You know, there's a lot of arguments to be made on both sides. I think probably what we'll hear is that they're still anticipating some rate cuts. But again, I think that horizon's going to be pushed out a little bit longer than people might hope. We'll have to see. If they really do give, a resounding dovish kind of answer, hopefully we can see the dollar go down a little bit, see some upward movement in gold, see some upward movement in the market in general. It's inarguable that this market wants to go higher. I mean, we see that, right? And we are making all-time highs in the SPX, and all the indices. So, I mean, that is a good sign for the market overall. I think they need to hear something from the Fed that, like, yes, what you're hoping for is going to arrive, and it's going to arrive at some kind of determinable time. We're looking at crude oil up about 1.32%. Obviously, a lot of stuff going on, again, with issues in the Red Sea. The situation was escalated this past weekend when the Houthi rebels actually drone struck one of our military installments that ended up killing 3 of our soldiers. This is going to obviously increase tensions in the area pretty significantly. Furthermore, Saudi Arabia said that they are not going to increase oil production. We can talk a little bit about that going forward. Obviously, that would alleviate some price pains with it. Overall, however, I mean, we're still around 77, 79 on this futures contract. The high on the yearly is 95.03. We're not as low as we were in December and November, but this isn't a bad spot, overall, I would say. It's certainly not hitting at the pump like, we would expect with higher prices. Tesla, we cracked that 200 level on pretty significant volume, trading down about 192.02. Again, a lot of issues going on kind of with the outlook for the company in 2024. EV as an industry in its whole is going to have some difficulties this year. Tesla is obviously at the forefront of that. There's some issues potentially with China entering the market in a bigger way than they currently do. Musk warned that they will, quote unquote, stomp the competition. Tesla trading at about 192. We'll talk a little bit as well about Neuralink, although that's not really tied with Tesla. It's still very interesting. And of course, it's kind of inarguable that people buy Tesla based on Elon Musk. Now, of course, they seek a return with it, but, they're looking at this kind of novelty that Elon Musk brings to the tech world, essentially. Steel Dynamics up nearly 5% today. This is what I'm talking about with this stock. I mean, you get some wide moves on this. We're trading at 122.20. I think just last week when I was with you guys, we were trading about the 110, 113 level. about December of last year, it tested that kind of last day with volume, did break through light volume again, traversing back down to that 110 level, and then it looks like it wants higher price. Now, this big jump up is on significantly lighter volume than some of its other upward moves. So I do see, again, a traversal back down in this stock, but this is what this thing does. Now, of course, past performance doesn't indicate, future, but this has established a pretty interesting kind of trading pattern, at least for the time being. The DXY, still at 103 levels, and really still kind of mid to high 103 levels, right? It is sticking at this 103 mark. Again, if this persists, it's going to be a slower moving market entirely. The Q's trading at 425.25, Google 153.38, Meta up about 401. Very nice crack over that 400 level. Disney, wow, 97.35. We love to see that. Not just because that's my break-even point, but it's just good to see Disney moving up higher. So we're 97.35, Apple at 187.99, and then just some of the other ones. Bitcoin, we'll talk a little bit about it. The German law enforcement actually seized well, first let's say Bitcoin. I mean, wow, what a move up. I think we're trading at 43,000 right now. That was about a 10% increase from where we were trading around that 39,000 level. The German law enforcement actually did seize nearly 2 billion euros worth of Bitcoin. This was in the state of Saxony. This was basically seized. This is 50,000 Bitcoins. It was seized from two men, age 40 to 37. They were running supposedly a piracy website. Authorities allege the men bought Bitcoins from the money they earned from the portal. So essentially they had purchased the Bitcoin back in like 2013 and just held it. I believe this was turned over voluntarily, which is quite interesting. But it'll be interesting to see, what happens in that area, right? Because you have just such a finite amount of Bitcoin. If that gets locked up in, evidence, I mean, I don't know really what the kind of protocol is for something like this, right? It's kind of interesting to think about. Let's take a look at SoFi. This is a Chamath SPAC baby. Trading at 841 today. So they had pretty good earnings. Let's take a look. Obviously, that's what this is, right? They were trading up something like 16%. They are down today. That's kind of just a correction from what I would see is probably an overbought position. But then also, people are probably just trying to get out of it. This thing with SoFi is people love buying at these like high levels. And they're waiting for a time just to kind of get out of it when it inevitably goes back down here. I remember that SPAC for SoFi was actually the story behind it, the lore that was being created by Chamath was so perfect. So many people bought into it. It went to a meme stock. I don't know. I think it was trading. I think it opened something like 27, and then Chamath got out of it immediately, and this made a lot of people angry. SoFi's been trading kind of at these lower levels for quite a while. We'll talk a little bit about them when we get back. We have Basil and Tim Ord on today, so stay tuned. You don't want to miss it.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, Tigers. I want you to take a walk with me real quick, all right? We're at TFNN.com. We're at the homepage. Check out what we got for you. Obviously, the trading room, gold report, mastering probability. If we take a little stroll over to newsletters tab, you're going to see the opening call by Basil Chapman. All right, this is a phenomenal newsletter, okay? It's thorough. I say it all the time. I love it. Bunch of subscriber-only webinars. You get access to all of those, all the time that we have them backed up on. Most recent one was December 20th. Maybe we should talk about having something soon, but we have Basil Chapman on right now. Basil, are you with us?
I certainly am, Jacob. How are you?
I'm doing well. How are you doing, Basil?
I'm very well, thank you.
Good. What are we taking a look at today? I did see, I was talking about still dynamics a little bit. You're saying it's part of the rotational market. Obviously I know you have a lot to talk about, but I would like at some point to hear your kind of thoughts on that rotational market and kind of what you mean when you say that.
Okay, so let me just do this quickly.
Sure.
This is the Dow chart. We are still at core position longs from March of 2020, and then added to October of 2022. And we still have those positions on a very short-term basis. Just as kind of protection, we did take a small short position in the Dow, got a very tight stop. And one of the reasons is we've come to a point here. This is the fourth. You can see this middle chart. So on the left is the daily chart of the Dow. The middle chart is the weekly, and on the right, these are all my charts. When I show them, I show you daily on the left, middle is the weekly, on the right is the monthly chart. Monthly chart is still very bullish. In the Chapman wave methodology, if you identify a low and it gets upgraded from a buy signal to a buy mode, the implication is it should go to at least a D. That means that the monthly chart, to make a peak D, you've got to go for at least 3 months. That's number one, with higher highs, that is. In the weekly chart, if this is the 14th week, and this is still only A, it means to get a D, we have a minimum. It's called, I originally called this technique the 7-wave form, because it gets you to the 7th wave in leg D. But actually, over the decades, I've found that it doesn't work quite that way. It can get a little more complex because at D, other things can happen. But if this is only A, even if we had to pull back very sharply, it would say that you can't make a peak D until at least another 6 weeks to 7 weeks. That's if every single week there's a higher high, then the next week there's a lower high. So that's very bullish. But that doesn't mean to say the short term can't see a sharp pullback. So within that context, the Dow is still positive. And as I say, we have just got a kind of a protective stop. But we're looking at today, Microsoft comes out with earnings. We had General Motors. That was good. We had Microsoft coming out after the bell, Google, and Advanced Micro Devices. So when I talk about the chance of a rotational market, it means that sometimes when the market is very strong and you've had leadership, let's just say Microsoft, which is trading at 408 today, it was up in the 412 area. We're still long for subscribers from the 338 level. Let's just say it pulls back really sharply. Google, for some reason, says something that's a little negative and it pulls back very sharply. It means that at this particular point, you can start to see areas like the SLX, which is the Select VanEck Vector Steel ETF, start to move higher. And you mentioned STLD. That is Steel Dynamics, steel products, hot rolled and cold finished steels. Very nice. It wasn't, and that's the other thing I wanted to mention. Stocks on one day can look quite poor. That wasn't looking very good. It looked like a head and shoulders from the top, and all of a sudden it reverses, and you've got this huge move of 4.5%. So that's what I'm talking about. I'm watching the oil service sector. I'm watching other things because what I've tried to do with my newsletter is I've tried to get a whole range of sectors, stocks in sectors or the sectors themselves. I've also tried to get stocks that are in completely different price ranges. For instance, we have a single-digit stock that we bought in the 3s and is now up in the 7s. We've got a financial stock. We've got Bank of America, which just today broke out nicely from the recent high. It's doing very nicely. So that rotation is important. So just to get to your question about this rotation aspect, let's just say it's the other way around. Google comes out, I think Microsoft might be first and then Google, whatever it is this afternoon, are fantastic blowout earnings. We could have one of the most amazing sessions tomorrow. We just don't know because we're on the cusp. It's been since the late October low. We've had November, December, and all of January up until now, where it's just been higher highs and basically higher lows. So I think on a shorter term basis, just purely on my technicals, we're starting to get overbought. But the market doesn't know that. Remember, the market doesn't know what we're looking at. It just does what it has to do. So we're trying to interpret it. So in that regard, I think it's kind of important what I've tried to do for subscribers is we're in different areas. Quite a few of them are kind of under the radar. And I think that's very important right now because it says that there's a chance that if you get some kind of just a normal pullback, which we haven't really had, you just saw the Dow chart. Let me go there again to show you that weekly chart. That is amazing. 14 weeks, and essentially, except for those 3 sideways weeks, we've been higher highs and higher lows. Just looking at it visually, you'd say, oh, this should pull back. But the market doesn't know that. So what I'd be looking at is if the Dow breaks under 37,000 anytime in February, then the consolidation should become a little bit deeper and maybe a little bit longer. But right now, we are looking at higher highs and higher lows. And that rotational sector is very important. And you would want to see the same thing in the IW. Really, it just cannot get any grip on it gets no traction. Every time it rallies, it stalls out. So we want to see a rotation take in all the different sectors. And so far, you've had the Magnificent 7 or Magnificent 6, and there is a broadening out. And if you look at the semiconductors, the SMHs, that's going to be important because Advanced Micro gives earnings today. But it hasn't made for 4 days since the high of 195.90. It's kind of stalled. So I think we have a lot of clues that we can look for if the semiconductors suddenly pull back. And I'm not sure that Advanced Micro Devices, with the billions that are coming in from the government to support new industry, I'm not sure that anything will happen other than the short term. So I think we've got to look at this and say, let the market tell us. So for me, I've got certain numbers. If they break support levels, then we're going to have a deeper correction. But right now, this rotation is very important. That's why I like to see the financial sector doing well. And I'd like to see the steel, because steel is your infrastructure. That's really important.
Absolutely. And, you not putting words in your mouth or anything, but I think you'd mentioned something with Tom with semiconductors, like looking at that is really now one of the really good indicators of where this market's going to go, right? And, we just had reports from Supermicro, and Supermicro just does, management softwares. Okay, so this is almost like derivative of these microchips, right? And Supermicro is doing phenomenally. So this whole industry surrounding the chips or the semiconductors are so massive. But
because the semiconductor chips are our oil of the 1900s and 2000s. Now you've got semiconductor chips that are in everything. They're as 100%. Important as oil used to be.
Basil, thank you so much as always. Have a great rest of your day, okay?
Thank you very much.
Take care now.
Have a good
Bye.
day, Jake.
Folks, we'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We were just interviewing Basil Chapman, the author of The Opening Call. Give it a check out here on TFNN.com. Of course, there's a 30-day money-back guarantee for all of our first-time subscribers to a newsletter. Now, let's take a pivot to another great analyst that we interview. We interview him every Tuesday and Thursday. He is the author of the Ord Oracle newsletter. This is ord-oracle.com. Go give him a check out, too. Really gets into the nitty-gritty of these kind of different interactions between the indices and has established a pretty good track record for himself. Tim Ord. Tim, how are you doing today?
Good. Thanks for having me on again. So,
Absolutely. Well, let's take a look at what we got going on today. We got the looking at the XAU in gold.
Yeah, actually, got quite a few questions from my clientele, and so I'm going to go through, and we're going to start from the bigger picture, and we're going to work backwards down to the smaller picture.
Okay.
So the first chart in the middle window is the monthly XAU gold ratio, and it goes all the way back to 1986. This chart works pretty well picking out the bigger time frames, bigger bottoms, and all those blue lines across there show the times when a bicycle is triggered. Anyhow, the bottom window is a monthly slow stochastics for the monthly XAU gold ratio, and when it gets below -10, or actually be +10, and turns up, usually you're setting at a major low. And we had that happen back in August 2022. As I said on your show, a lot of times I think that August of 2022 was an important low. And this is one of the reasons why I say that. And I got I got about 4 or 5 different chart patterns that actually say this same thing, that August 2022 was probably an important low. So anyhow, even though the market has made a low back in August, we haven't really broke that low. We've been consolidating here last couple of months. But anyhow, that's on a buy signal since August 2022 low. Now go to chart 2.
Sure.
So this is the middle window is the weekly XAU gold chart. Mm-hmm. And at the same time, the monthly gave a buy signal. The weekly also gave a buy signal. And how that buy signal is triggered is when the RSI of the weekly XAU ratio gets below 30. And that happened back in, I think July and September. 2 times kind of did a double buy there. And since then, the market has rallied up some over about 6 months. And basically over the last 6 months, it's pretty much gone sideways as far as the XAU is concerned. But those 2 signals are still on a buy signal. And we can go to chart number 3.
Okay.
And here's another method. This is the middle window is a silver gold ratio. And I usually use the gold silver ratio. I flipped it around as a silver gold ratio just because it kind of goes up and down with the XAU. Well, anyhow, the top window is the XAU. The next window down is the RSI for the silver gold ratio, which is the middle window. Window below that is the rate of change on a 12 period for the XA for the monthly silver gold ratio. And the bottom window is a percent volume, a percent Bollinger Band for the silver gold ratio. So this is a monthly chart again, and the chart goes back to looks like about 1986 also.
Yeah.
But when the RSI, or actually 2 of the 3 indicators, that's either the RSI, the rate of change, and percent Bollinger Band, at least 2, if not all 3, give a buy signal. Well, last time that got a buy signal was August 2022. So it currently is on a buy signal too. So that's 3 different longer-term methods that all gave a buy signal around the August 2022. So in my opinion, the bigger time frames are still up. We haven't broke the August 2022 low, but we have consolidated since last September for about last 9 months. We really haven't done a lot of anything. So the bigger picture looks bullish. We do think we're at an important low. But we really haven't done anything here over the several month period. So let's start looking at the shorter term time frames, which is chart 4.
Chart 4. So chart 4 is the RSI for inflation deflation ratio.
Right.
Okay.
And that's the weekly time frame. So the top window is the RSI for the weekly inflation-deflation ratio. When it gets below 30, and all those blue lines across there show the times when that buy signal was triggered, and that was triggered I think in October of this year, we had a minor October low that triggered that low. We ran up, and we're kind of back down again. What I want to point out, though, is when the weekly inflation-deflation ratio closes above the upper or lower Bollinger Band, it's usually at a bottom. That happened at the October low, and it's again happening right now, which is that far right to the window there. Mm-hmm. You can see that ratio is closing below the lower Bollinger Band. And it's also bearish when it closes above the upper Bollinger Band, which is noted in red across the graph. So that's kind of on a buy signal right now. The RSI is not giving a signal, but the Bollinger Band is. So on a weekly time frame, that's also bullish. So let's flip to chart number 5.
Sure.
So we're getting down to the daily time frames. So the weekly inflation deflation Bollinger Band penetration is given a buy. This chart, the top window is the RSI for the inflation deflation ratio. Next window down is the daily inflation deflation ratio. So when the RSI of the daily inflation deflation ratio gets below 30, which it did last week, then closes above 30 and stays above 30, it's a buy signal. And that's happened last week. I think I might have pointed that out in my chart last week. Can't remember. But it's on a buy signal on the daily time frame. So at least on a short term, on a near midterm, or actually on a longer term scale, I think the August 2022 low was an important low. On a short term scale, we're giving a buy signal right now, where this buy signal will determine what this short-term buy signal will determine what happens next in the market. Will it be just another 3 or 4 week rally, or will it be a multi-month, not a multi-year rally? And that's what's determined in the future here. And I know we're going to come up on a
we're very close to the break right now.
So I'll save that for the next update. But
and it will be nice
happening, but it seems like it's just very slowly happening here.
Right.
So,
and that's what we've been seeing, just like as you said, for months now, and just trying to get some action in the GDX. You had some interesting movement. The GDX kind of gapped down a little bit a few days ago, then came right back up, which you kind of expected with the general market conditions. But really getting something that's going to spur it and have it run is going to be phenomenal. Tim, please stay right there. We'll be right back.
Yeah.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We're with Tim Ord of the Ord Oracle. Tim, how are you doing? I think we left off on chart 5 or 6.
5, actually.
Perfect.
Just a quick comment. The daily inflation-deflation ratio, RSI, last week closed below 30. Right now we're at 31.90, so it's closing above 30. So probably over the last several days, at a minimum, or at least at a short-term low. So anyhow, we're at a short-term low, I think, on GDX. And the next couple of charts will determine what happens next, how the potential current rally will last. It will last a couple of weeks. If it does that, then it will probably stall the longer-term uptrend. That's what I'm saying. Anyhow, chart number 6.
Okay.
The middle window is the monthly HUI gold ratio. And normally when this ratio is rising, gold stocks are outperforming gold. And that's what happens in uptrends in the gold market and gold stocks. When that ratio is heading down, it's usually a bearish sign for gold and gold stocks. If you notice, it gave the red lines are when it closed below its mid-Bollinger Band. The blue lines are closes above the mid-Bollinger Band. And it gave a sell signal back in 2021. It didn't come exactly at the top because this is not really designed to catch the exact tops and bottoms. It's designed to catch the trend of the market. So even though the bottom may have been August 2022, this ratio has not turned up yet. But we're still close to the lows if it does, as far as the XAU is concerned, or HUI. But to really get a confirmation that the gold stocks have started a multi-month, if not a multi-year rally, is when this ratio closes above the mid-Bollinger Band. And so far it hasn't yet. Even though the market's up a little bit higher than August, this ratio is more or less gone sideways since looks like about August 2022. It pretty much traded sideways, gone up a little bit, gone down a little bit, but it's pretty much unchanged since August 2022. What's important here, though, what seems to be happening, if you notice, the Bollinger Bands are starting to squeeze on that ratio.
Yes.
So the ratio really hasn't moved at all, relatively speaking, since August 2022. The second window up from the bottom is that determines the narrowness of the Bollinger Bands. And so when this is at a low level, or when the Bollinger Bands squeeze together, that chart, but right below it, will become at a low level. And we're pretty at a low level right now.
I see.
Matching what happened back in pretty close to 2019, and there's another place, 2022. So what that predicts is usually when there's low volatility, when the Bollinger Bands squeeze together, it'll anticipate high volatility, and that's what's probably coming in front of us. When will it come? Will it come in the next several months, or maybe wait till next year? I don't know. But it is saying that that ratio will become more volatile in the coming months, since it's the monthly chart. So while we like to see the current potential rally that's giving a bicycle right now, short term on GDX, HUI, and XAU, is for the rally to continue. If that rally continues, most likely this ratio will go up and close above the mid-Bollinger Band. If it does that, then it predicts at a minimum it'll be at least a year rally, because if you go back and measure the times between those red lines and blue lines, it's at least a year. Matter of fact, the last time it gave a sell signal was August 2021, which is over 3 years ago. So, and it has been on a sell signal since. So if we get above the mid-Bollinger Band, that would predict a multi-month, if not a multi-year rally. And that's probably what's coming. The deal is it hasn't closed above the mid-Bollinger Band yet.
Fantastic.
So that's the reason why the current rally needs to rally at least, in my opinion, probably 2 months. If it does that, that probably will close above the mid-Bollinger Band, and we're off to the races.
Right on.
And so that's what I'm looking for. Let's go to chart 7.
Sure.
Here's another way to look at it. The middle window is the monthly GDX. The top window is a monthly cumulative up-down volume. And so it also gave a sell signal back in, looks like January 2021, and it's still below its mid-Bollinger Band. This is what the top window is, the up-down volume, and the bottom window is the advanced decline, cumulative advanced decline. And I did a Bollinger Band with those. Those two indicators need to close above the mid-Bollinger Band to give a multi-month, it's not a multi-year rally. So two different methods kind of saying the same thing here. Both of them are still below mid-Bollinger Bands, but most likely if one closes above it, probably the whole thing will. And they'll probably predict a rally that'll be at least similar to the 2016 low, if not the 2019 low. Because we'd break out of this kind of a downtrend consolidation that's been going on to 2021. Right. So, but we need a rally that lasts at least a couple of months for those two type indicators to close above the mid-Bollinger Band. So I'm hoping this current buy signal could last, say, into April, ideally May. That would probably cement the idea that these would give a multi-month signal. So it's going to happen, if not sooner or later, but it hasn't happened right now. So that's what we're kind of looking for. So things are extremely cheap here.
Sure.
But momentum needs to turn up, and these are two type longer-term momentum indicators. And once they turn up, they usually stay up. They're not like go up and down, back and forth. Usually they start in one direction and they go to direction at least a year, sometimes 2 or 3 years. So that's what's sitting in front of us. The deal was August the 2022 a low, a major low, which I think it was, and to get that momentum for all gold stocks to go up instead of just a few, we need these two type indicators. And so far, you gotta say, when, I don't know. I think I thought it would happen sooner than what it has, but they got right back up the mid-Bollinger Band. Both these two indicators I'm talking about right now, back in, I think, November, December of last year, I'm thinking we're on our way. Well, it turned back down again. So will this next rally get above it? It could. If it does, then it's probably a multi-year rally for all gold stocks and probably most likely silver stocks. So
absolutely.
We'll see. That's the bigger picture of what's going on here. So
yeah, and I'm going to post these charts in the den. I mean, I think 6 was really kind of insightful. I'm going to post all these in the den. And Tim, I know we only have a short time left here in this segment. We did have one of our listeners, John Belaya. He asked what your thoughts are on the TLT VVIX ratio currently. I don't know if you have anything at the moment, if you address it Thursday or something like that. But
yeah, let's take a look at it Thursday.
Perfect. That sounds great. We'll do it. Well, Tim,
because we don't have time to do it.
Definitely.
So we'll talk Thursday about it.
Wonderful. Well, Tim, thank you so much. That was phenomenal. Again, I really like chart 6. All of these were great. Thank you so much.
You bet. Talk to you then.
Absolutely. And again, that was Tim Ord of the ord-oracle.com. Go check him out. Phenomenal. Stay right there.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Take a look right now at Super Microcomputer. They bumped up pretty significantly, up about 3.84% today, trading at 514. These guys basically offer server and storage systems for Silicon Valley. So servers for cloud computing, artificial intelligence, 5G, data centers, anything you think about. And this is what's so cool about this run-up in tech, right, is all these, obviously servers and storage is not necessarily derivative or anything like that. It's how the whole industry kind of works. But I mean, you don't need to just get into NVIDIA. You don't need to just get into AMD or something like that to get some really sweet exposure to this kind of tech revolution that we're experiencing right now. We take a look here. I want to give you just some insight on what happened with them. So they said revenue for the last quarter came in at $3.66 billion, up from $3.06. The company reported adjusted EPS of 5.59, as well as 4.93, which was what the analysts suggested. For the full fiscal year, Super Micro raised its revenue guidance to a range of 14.3 to 14.7. And guys, that's from 10 billion. So they had pretty strong guidance, and they went up on some pretty significant volume. Obviously, the price point is still kind of high. But if you think about it, too, I feel like they don't have maybe as much risk as something like NVIDIA does, right? I mean, everyone's going to use chips, no doubt about it, right? NVIDIA is the forefront of that, of course, AMD is as well. But Supermicro is this offering the infrastructure to kind of place your project onto it, I think is a really interesting way, like I said, to get exposure to this market entirely. Also, Pfizer beat estimates, which was really interesting, especially with declining COVID. So the company reversed roughly $3.5 billion in revenue related to the expected return of 6.5 million doses of COVID drug. They just did pretty well. The vaccine raked in $5.36 billion in revenue for the first quarter. That was down 53%, but they're still doing all right. Folks, thank you so much for joining me. We had Tim Ord on today. Check him out, Ord Oracle. And then we had Basil Chapman as well. I hope you have a great rest of your evening. Tom will be back with you tomorrow, and I'm sure I'll see you soon. Take care now.